But to try and understand and decode the specific stocks, we know the news flow already, but what should you do about those stocks now? That's something that Gurmeet Chadha is joining us to answer that. Gurmeet, hi, thanks so much and good afternoon for making time for us. Just wanted to begin by discussing Tata Motors with you. We now know the news of the demerger. We understand the entire SOTP, which is turning out to be. The stocks of Tata Motors as well as Tata Chemicals, which has a holding in Tata Motors, is also reacting to the news flow. But for an investor, what actually changes? Is this a trigger that people should add positions into or just continue holding on?
Hi, Anisha. Thank you for having me. I think the lot of re-rating of Tata Motors has already happened. The stock was around 100 levels during COVID, and I think it's been a 10x journey, phenomenal wealth creation, and I think that's more got to do with the turnaround businesses. Seen, they've reduced debt. If you see, for example, JLR, the margins actually went up by 400 basis points last quarter, and the overall margin obviously got a boost. In the CV portfolio, the EBITDA margin was up almost 210, 240 basis points. So if you see the current sales mix, it's about 65 is JLR, 20 is CV, and the balance is personal PV vehicles. Now the EBITDA margin for PV is slightly lower because of the investments which are going into EV. So I think this demerger has two purposes in my view. One is obviously they believe now that the personal vehicle business is still sustainable and can fund the ongoing capex. Their market share has jumped up from 4 5%, in 3 4 years back to 13 14% now, thanks to the EV leadership as well as the SUV new range which they came with, Harrier, Safari, etc. Sierra is also due later this year. Second, even in the CV cycle, I think a lot of people think that now you are in a long capex cycle. So while in a short run, the CV sales could be impacted due to elections, but looks like a long investment cycle ahead of us. So if you put an SOTP valuation, which a lot of brokerages have come up with, probably one third will go to the CV and two-third will go to JLR plus PV, broadly speaking. So maybe the current upside could be tapped, but in my view, I think if electrification, the way it is progressing, if they can demonstrate more, I think PV business and eventual listing of EV business will create more value. So long term still constructive. Short run, in my view, bulk of the positive news probably is getting reflected in the price.
Gurmeet, what are your thoughts on Zee? The way a story is developing out there, especially the fact that the latest call last evening was actually not done by Puneet Goenka. It was done by the board. And I pick up from the street that actually a large section of the current shareholders asked for this conference call with the board, not with the current management, so that they could also discuss possibilities of the board or the succession if there is a change required, all of that. And last time in the earnings call, the current management spoke about, Puneet Goenka's commentary was all about, the new Zee, how the earnings and frugality and all of that would be put in place. So what should the current shareholders do?
Ajay, there's a confidence issue right now because the texture of earnings was doubtful when a lot of receivables were in house, and came then SEBI news of funds getting diverted came in. A lot of guarantees were given without board. So I think the confidence booster will come. The Sony merger deal provided answer to some of the governance concern markets had. Unfortunately, that's also called off. So I would wait for things to settle on. I would want the outcome to come of SEBI in terms of whether actual funds diverted or not. Also, the quality of earnings needs to improve. Their receivables with Dish TV and other subsidiaries ran into months, and that those were eventually written off and were being shown as book profits. So in my view, I'll agree at 150 bucks probably captures most worst things. But I think this business now is changing. It needs a lot of capex. It's now becoming like telecom. You need to invest in content. And with our Reliance Disney deal, you have somebody with almost 100 channels, 8 9 different languages, and a huge pipeline in all. So there is sports content, there is regional content, and there is movie content, right? Sports content especially needs a lot of investments, and so does OTT. So my sense is this business now continuously needs investments, and I don't think Suzy has that. Sony was bringing in about 10 12,000 crores. And mind you, this industry, look at Netflix, the valuation is what, $260 billion. It's even more than Reliance. Right? So content industry, in my view, will create a lot of value, but you need strong muscle, a strong partner, probably ZPs, who can infuse capital and work on content and allay any governance concerns street has. So it's an avoid for me till the time there is a broader development and I see one more partner coming in with good capital and good integrity and governance track record.
150 bucks, most of the downside is limited now, but of course content and the mainstay business is something to watch out for. But since we're on the subject of Zee, Gurmeet, just hold that thought. We'll quickly play a soundbite of the con call that happened yesterday, because as we were pointing out, Mr. Puneet Goenka was not on the call and questions were raised to the management as to what the future is of leadership. Listen into what they had to tell the investors.
The board has been debating. We are yet to form a view, but I would say that we need to consider various factors which are there in the domain of our thinking. Basically, I would say that we are putting through a revival process, and it requires tremendous amount of focus, knowledge of the company, what it did in the past.
Okay, so that was about Zee and the comprehensive 360-degree take. But the other stock that deserves mention, or the other group as such, is IFL. Ajay, we have seen that time and again there has been these issues that have been coming up. Look at the price of IFL Finance and Securities today. Both are down in the trading session. And while on the other hand, somebody's loss is somebody's gain. You have Muthoot and Manappuram, which are clearly excited that maybe some of the business that goes away from IFL might come to them.
See, there's no question about the fact that gold loan as a category is a high growth one.
Correct.
Many of the new players wanting to enter that space. It's a lucrative one and also a high growth one, of course. But the way this business was being done by IFL Finance is something to take note of, because if you look at the commentary, what we understand that regulatory messaging was done to the company to put the gaps into place and to put some plug those gaps actually. And after that, 3-4 months of observation that those gaps are not plugged, regulatory remedies are not taken, RBI has taken this particular action. That is something which actually surprised me. Point number one. Point number two, again and again there is regulatory glare on this group.
Correct.
That is something which is, you may say it's a small issue, this, that. But earlier it has been SEBI, now it is RBI. There are systems and processes which they may want to review on a group level, that why these things are getting repeated. And then of course the entire brokerage community has spoken about it, that somebody's loss will be somebody's gain. The market will not wait for for IFL to plug those gaps and they can go back and take that market share. Other players who are getting even more aggressive will actually go ahead and take that market share. And I think this is what many of the brokering reports are actually speaking about today. Elara says this is likely to happen. Equirus also says something on the similar line. But Gurmeet, you've been analyzing this space, gold loan space, for some time. IFL issue has happened fine. But any other stocks that you think are doing well regulatory-wise, processes-wise, growth-wise?
So Ajay, few of them actually, and I think one message from RBI is very clear. Wherever they will see any signs of systemic risk, they will intervene. It was first short-term personal loan, less than 50,000 loans. They went after fintechs. Then we saw the entire Paytm saga on KYC and onboarding. They acted in a lot of banks without taking names, including one large bank where they wanted an outside candidate as the CEO. They have been trying to, there'll be probably market has different views on RBL Bank also. RBI trying to probably do some change in management, different entities buying stake. So I think one thing is very clear. Any portfolio which builds stress, I think so. I'll be actually wary of new companies which are growing too fast. In this business, actually, to me, fast growth is a red flag. It has to be more responsible growth. Gold finance remains a very high growth portfolio. It's also the nature of the lending you do, and also gold prices have been up. I think Muthoot and Annapurna have done well, but there have been instances with them as well. Muthoot in particular, probably if you see the stage 3 assets, because that's what you monitor, improved last quarter. Other than obviously the AUM growing by 22% because of higher auctions, and higher auctions in this case happens when you see stress and there are recoveries which happens, and also is a function of the gold prices, right? So any disparity on how you're on your weighing gold or on purity of gold will raise eyebrows. I think, in my view, IFL should fix it. It's too big a group to let go of this. We like Poonawalla. I think they've strengthened the board with some of the ex HDFC stalwarts joining. It's a very balanced growth which they are doing across different segments. They in fact exited the housing mortgage business, which was the low yielding one. So they are literally doing pretty good stuff. On across categories, almost 15, 18 different categories. I also think maybe banks have an edge over NBFCs at this point of time. Once the CRR cut happens, see the kind of liquidity. I've not seen this kind of tight liquidity for a very long time. Your 1 year treasury bill is higher than the 10-year GSEC. So maybe post advanced tax, post March, you will see liquidity easing and maybe rate cut cycle in second half of the year. Maybe banks will bounce earlier than that. And I'm very constructive now on Bajaj Finance. I think it's been 2 years of underperformance, but the EPS growth has been very, very good. So it's a proxy play to consumption trend as well. So for us, it is home finance, where we have home first, banks, and then we have Poonawalla and Bajaj Finance for the portfolio.
So that's a comprehensive take on, of course, IFL Finance, gold loan industry, and what you should be doing. On that note, we let you go, Gurmeet. But